Well, good afternoon, everyone. Thanks very much indeed for joining us on behalf of Mont Royal Resources. Thanks for joining us for this first investor and shareholder webinar following the company's highly successful relisting on the ASX yesterday. I'm Nicholas Reid from Reid Corporate, and it's my great pleasure to introduce Mont Royal's new Managing Director, Nick Holthouse, who joins us from Malaysia. He's at a rare earths conference over there, and he's en route to Montreal, Canada. Mont's Head of Corporate Development, Peter Roos, was going to join us as well from London, but he's had to head to hospital for the birth of his second child, so I think he's got a pretty good excuse. Well, it's been a transformational period for Mont Royal, culminating in its successful merger with Commerce Resources, a transaction that brings one of North America's largest rare earth deposits, the Ashram project in Quebec, onto the ASX. With more than $50 million of historical investment, Ashram is without doubt a Tier 1 asset, and it's poised to play a key role in building new Western supply chains for the critical minerals that are driving the global energy transition. Mont Royal's relisting comes against the backdrop of some significant tailwinds for critical minerals and rare earths in particular, and that's why we're really pleased to have Nick with us today. He's a real expert in the rare earths space, and he's going to step us through the company's new investor presentation, outlining Mont Royal's strategy, upcoming milestones, and how the team plans to unlock the full value of this exceptional Canadian asset. Before we get into it, a quick reminder that this is intended to be an interactive session. So to all of those who are listening in, if you'd like to ask a question, please use the Q&A tab that's on your webinar browser to log your question, and I'll be sure that we cover all of the issues raised before we finish up. Nick, it's great to see you. Thanks very much for joining us. Congratulations on the listing, and please take us through the Mont Royal story.
Thanks very much for that very warm welcome, Nicholas, and welcome everyone that's jumped on. I can't see how many attendees we have, but let's walk through this very exciting story, which we've just managed to kick off in the last day or so. The obligatory disclaimer, I'll take that as read. The investment overview. Look, I'm sure a lot of you have heard this story before, but we are absolutely sitting on one of North America's most unique assets, I think, in the rare earth space. I've been in the rare earth game for about 8 years now. First 4 years with Hastings Technology Metals, so a very similar flow sheet to what we're going to see with the Ashram project. Then 3 years as CEO of Meteoric Resources, very different flow sheet, but again, a clay project in Brazil. Really took that project from, I think I was employee number 2 in that instance, and took it up to a team of about 60 or 70 that it is now, and then stepping out and into this opportunity, which was offered to me by Jeremy Robinson about 5 months ago. I have to admit, I was a bit taken back when Jeremy first spoke to me about the Ashram project. I thought I'd seen them all. Very keen interest in rare earths. It's been an absolute game. I guess it's reinvigorated my interest in the resources sector. There's nothing more fascinating than the rare earth space in the mineral resources sector. I've been a mining engineer since and been in the mining industry since the late 80s. Really strong focus on operations, but more recently in projects, and then more recently again into management roles. But stepping into the rare earth space has been fascinating. It's really engaged me, and as being a strong devotee, I thought I'd seen all the projects on the planet until Ashram was introduced to me, and it's been around for quite some time. But not only the scale of this project is of interest, but it's the most important thing for me, and the thing that really sunk the hook was the fact that the metallurgy works. There's a lot of great headline stories out there in the rare earth space. People talk about really exciting headline TREO grades. They talk about really exciting baskets, but that doesn't really translate to an economic story, and this certainly is. We've got a great headline grade, but it translates in that all-important first flow sheet step, that flotation step, into a really good quality monazite concentrate. We get around that 37% con. That's really exciting. That's almost a saleable product in its own right. In fact, it could be, and that gives us options. So this is what really drew me into this project. The fact that it's also in Quebec. Quebec's shaping up for me to be a really interesting place to do business. I've never worked in Canada before, but the support that we're seeing in that government space in particular is enormous. And I think with the current geopolitical tailwinds that we have at the moment. There's never been a better time to try and work in this space, certainly not my last 8 years. So with that geopolitical support and a good quality project, I think it's a great time to try and launch a project like this, and getting that government assistance, not only from the provincial level, but also from at the federal level in Canada, is absolutely real. We've also got the US down to the south. We do have connections through to the US government for support as well. But I think the way things are shaping up, I think any support coming out of other governments, whether it be Europe, the US, or even Australia, I think the Canadian support is really going to eclipse that. And that's something we need to take advantage of. So really excited to be working in Quebec, really exciting to be building those relationships with the Quebec government and also at the federal level in Canada as we go forward. We've got a new leadership team. We've got a new board. The old board is gone. The old exploration look and feel for the story is going. As I said, this has been around for 10 or 15 years. There's been an awful lot of drilling done, hence such a large resource that we have with us now. So that exploration approach is drifting off. We're changing the metrics of the team, and it's much more of a development feel going forward. So new board, very much development focused. New management team, again, very much development focused. We'll talk a bit more about that going forward. And I guess at the back end of all this, and this is, I guess this is why we're all here today. We've just completed a very successful merger transaction. It has taken some time. The Mont merger with Commerce Resources is now complete, and as you all know, we recommenced trading yesterday on both exchanges. So that's a really exciting milestone to reach for the project. There's some real benefits in bringing this story to the ASX, and we can talk a little bit more about those as we progress through the presentation. Okay, as I said before, strategic asset. You can see where we're located in that northern part of Quebec. It does come with some issues. That northern part of Quebec is very much infrastructure poor. So we do have some challenges in that space, and that's possibly one of the reasons why this project has been milling around the gate for so long rather than progressing forward. But as I said before, the tailwinds that we're seeing, the pressure in the sale that we're getting, not only from the provincial government in Quebec, but also at the federal level in Canada, and that real sense of nationalism that the Canadians are feeling at the moment, is all translating into real and tangible support for a project like ours to go forward. And what this project really needs in the first instance is infrastructure. So we need an access road. There's a few options that we've been looking at. We've just finished a road access analysis piece, which we are now sharing with government, local Indigenous groups and industry. And there's a couple of routes, but the route that is really starting to shape up nicely at the moment, I think, is the route down south to Shefferville. It's certainly on the radar for the government of Quebec. They really want to see that route opened up, not only for us, but for other players in that area, other exploration players as well. And it's also garnering a lot of support from the local Indigenous groups as well. They really want to see that area opened up for their own purposes. They like to hunt and fish, and an access road in that area would certainly help them in that space and allow them to connect to the wider world as well. The dual listing, as I spoke about that before, we're really seeing, and we've seen that translate in a really successful and rapid IPO process that we've just been through. We're very much oversubscribed in that very short space we had the IPO open for to raise that $10 million. We could have taken a lot more. I kind of wish we had. But anyway, we've raised a good lick of capital, $10 million. And again, that access to the Australian markets, I think we're getting a really good response from the Australian market. The Australian investing market very much understands assets like this. They understand the scale of these sorts of assets, and they understand the opportunities that come with them with connecting into government and also wider industry in this part of the world. So we're getting a really good response with that dual listing. And it's one of the key reasons why we've gone through this whole merger transaction and elected to join these two companies together. Okay, a little bit on the capital structure. I won't spend too much time on this, but essentially, I guess the key takeaways are we've launched with an EV value of around $27 million. With the raise, on top of that, we've got a market cap of around $38 million. And there's around, in warrants and performance rights, we're looking at around 110 or so out there in the market, 110 million out there in the market or so. So, we're off to a good start. We certainly have enough cash in hand to go forward and focus on what we need to do to take this story forward. And that is, again, very much a development story going forward. So PEA, moving into a PEA space, moving into permitting, and the heart and soul of these projects is always metallurgy. We've got a really good metallurgical story at this stage. We know we can go all the way through to a mixed rare earth carbonate and produce very much a saleable product. But there's always ways you can optimise that. So we need to spend some time on, an additional time and money on making sure that we get that flow sheet as best as we possibly can when we get this project to the execution stage. So, of course, a strong focus on metallurgy going forward as well. But, long and short, we are cashed up. We've also got, just to add to that, we've got around $3 million in tax returns coming towards the end of the year as well. So this is these are rebates from the flow-through program, the exploration work that's been done by both companies over the past 12 months or so. So that's going to be a nice little top-up to the coffers as well. A bit more about the project. 100% owned. We're about 130 kilometres south of Kuujjuaq, which is the regional centre in the Nunavik. It's an Inuit town, the administrative centre, as I mentioned before. We've got a JORC resource estimate. It's actually an NI 43-1 estimate, but it's also JORC compliant. We've been through that process. And with that, we see around 204 million tonnes at around 1.9% TREO. Now, coming with that is a really nice grade of fluorite. Fluorite is a really interesting metal or interesting mineral. I have not had much experience with fluorspar, but going forward, there's some real opportunities in that North American space with regards to producing a fluorspar product and meeting the market. The US and Canada are net importers of fluorspar at the moment. It's a really important additive in the steel making, aluminium making industries, and also in finishing uranium products as well. So certainly a strong demand for that met grade fluorspar product within Canada. There's been some really good work done in the metallurgical space around that. I think it's going to be a really a high quality and important additive to the cash flow story in that stage one execution piece for this particular project. So, as I said before, we produced a good fluorspar product, and we really want to try and incorporate that into the flow sheet going forward. So a little bit more work to do in that space. The basket itself, really nice. A really nice component of NdPr on there. That's really important. This is a magnet story, this particular deposit, so it folds in really well. Whether those magnets are going into consumer electronics, power generation, into EVs, or even the military, it doesn't really matter. But we do have a really strong basket. We have that really strong mass pull that we see with those recoveries at the concentrate stage. Every tonne of ore we put through this particular project at the crusher end, we pull about 12.5 kilos of TREO. I mean, it's an enormous pull. And that's a really good story. That adds to the economics. So we've got a really nice basket. The mineralogy, we've talked about that already. We know we can float this stuff really well. We produce a really good quality float concentrate, around 65% recovery to produce that 35 to 37% TREO con. And as I said before, that gives us options. That TREO con is potentially saleable in its own right, or we go further downstream to produce that mixed rare earth carbonate through a solvation bake process. Onto the board, as I said before, a new board in place led by Cam Henry. Cam Henry's a well-known mining executive in the West Australian space, but operating extensively through Canada, as is Adam Ritchie, both engineers, along with myself. So we've got a really strong sort of focus on development. As I said before, we've got 3 builders. And behind us, we have Ronnie Beaver and Jeremy Robinson, but in the financing space. Jeremy's a really interesting guy. He absolutely understands rare earth projects. He's got a really good nose for those sorts of projects. Really pleased to have him on the board. And Ronnie Beaver's been around for a long time, and he comes across from the Mont Royal acquisition to support us in that space. But as I said before, very much a forward-looking, industry-focused board. Very, very pleased to be working with these guys going forward. The old management team is out. Aside from Darren Smith, Darren's a really interesting guy. I'll come to him in a second. But Pete Roos comes across from Mont Royal. He'll be the head of corporate development. Really pleased to have Pete on board. He's been a real asset, particularly in this merger process. So looking forward to working with Pete and taking the story forward. Cindy Valance, she steps into the VP Government Affairs role. Cindy's a really quite a unique person. She has been instrumental in opening doors for us in Canada. She has that ability to pick up a phone and talk to pretty much anyone, either at the provincial or federal level. And she has a fantastic working relationship with the Indigenous groups that we're engaging with, the Naskapi Indians and the Inuit. So really pleased to have Cindy on board. She's doing a great job. She's kicking down a lot of doors for us in that government space, which is absolutely what we need, particularly when we talk about one of the key drivers for this project going forward is that infrastructure commitment from government. And Cindy's absolutely the right person to lead that charge. Darren Smith. Darren's been with the project for 15 years. He's associated with other projects, high-profile projects such as Patriot Battery Metals. He's a geologist, but he's also got a really strong metallurgical bent as well. So he understands flow sheets exceptionally well. He understands the rare earth market. So he'll be staying on as an advisor for the next while. And then behind him, we've got Gavin Beer. Gavin Beer is a guy that I've brought in. I've worked with Gavin many times in the past in the rare earth space. Metallurgist. He's worked on most rare earth projects around the world. He spent a lot of time in his younger years working for Linus, so certainly understands good projects. He's got a really good knack for looking at work that others have done, and that's certainly his remit at the moment. He's looking at all the work that's been done in the past in the metallurgical space for both REEs and Fluorspar. He'll be having a close look at that and seeing what opportunities there might be going forward with a new approach and some fresh set of eyes on that. So. And we've got some interesting test work coming up, which I'll talk a little bit more about further down the presentation. But great to have Gavin on board. The development strategy, as I mentioned before, the key drivers that we have for the moment are really what's in front of us. We really need an access road. We need to get in front of government and make sure we get an access road in place. So this is the immediate focus for us. We need to close out our PEA. So we're looking to bring that to market in Q1 next year. And we need to start thinking about how we stage the development of this particular project. So as I said before, the quality of the concentrate does give us options. We need to really have a good think about that as we go through the PEA process and prior to the PFS process about how we consider the developments, the stage development, potential stage development of this project. The old thinking was that we would go straight to separated oxides. We've pared that back. That really is, in my opinion, a step too far in this instance. We really want to reduce the risk. We want to reduce the capital burden for that startup project, and the scale and the quality of this project allow us to do that. So, we need to take advantage of those opportunities that this particular deposit and the support that we're getting out of the Canadian government offers us. And staging this is a really smart way of going forward. So we're reducing the scale, coming to market with around 3,000 tonnes of NdPr a year and about 100 to 150 tonnes of DyTb. So it's a really good start. This project is eminently scalable. We can scale this thing up over time to meet the market. Moving on from that, secondary development focuses really are unlocking value from other commodities. So I mentioned Fluorspar already. We also have a really interesting niobium story that's developing outside and just adjacent to the rare earth story. So bringing that forward is really important. So as I said before, incorporating some sort of Fluorspar flow sheet into that stage 1 development is something I'd love to try and deliver. We'll see how we go with that, but we've got a little bit of work to do just to make sure we optimise that flow sheet and bring it in. We don't want to create a rod for our backs with regards to creating an exceptionally large capital or technical burden for us to bring this project to market. So we're very mindful about how Fluorspar might play into that, but I'd love to try and incorporate that in that first instance. It's certainly going to be a nice little value add to the project going forward. And niobium, we've had some really interesting hits in that niobium space. We see really good niobium hits from surface, nice wide intercepts and good grades. So there's an opportunity there, but I think niobium is probably something that we'll be looking to push along a little bit later on. We'll focus for the moment on Fluorspar and rare earths, and then that niobium story potentially becoming that third value-adding prong, I guess, to the Ashram story going forward. And in a wider sense, we want to diversify downstream. So we're very much looking at being a junior miner in the first instance, so stopping at that float con or potentially a mixed rare carbonate story. We don't want to go all the way through in the first instance down to a magnet, as some others propose to do. That's just technically it's a big chunk to bite. Capital-wise, an exceptionally large chunk to bite, and it really stretches juniors beyond their limits, I believe. So sort of paring it back and sort of staying in our lane for the moment. But going further downstream is absolutely something we want to look at. For us, it's really, I think, collaborating and considering JVs with industry to go further down into those value-adding steps beyond a mixed rare earth carbonate. So these are the steps of separation, metallisation, and then ultimately magnet making. There's lots of other groups out there which do it really well. They have the expertise. So working with those groups, collaborating with those groups, looking for JVs in that space with industry is probably a smarter way for us to go forward in that sense. So that's something that we're keeping an eye on as we go forward. Those conversations on the far right-hand side are going to become very much easier once we have a few key things in place. And one of those is completing the PEA and getting that commitment from government on an infrastructure piece for access to this site. I think once we have those in place, people will really start to see, industry in particular, will start to see how they can potentially access these molecules. These molecules have an access out to the wider world, and that's when those conversations will really start to build up, I think. So that's our development strategy going forward. I'm just going to skip this slide. I know everyone understands where rare earth elements go, but these are all applications which would absolutely suit our basket profile. And we all understand the thematics going forward. We understand that the demand is growing and that there is going to be a supply gap going forward. So there will need to be new businesses that come into this market to not only at the mine gate, but we have a very immature supply chain in the West. So there's an awful lot of space and a lot of work that needs to be done in the separation space and the metallisation space, and in the magnet making space as well. So all those things need to grow in concert, and the mine gate is only one of those pieces in the code. Okay, a bit more about demand, so we understand all these issues, I think, going forward. Okay, just a quick peer comparison, and look, unfortunately, due to ASX restrictions, there's only so much information we can put into this, but I suggest you all go away and do your homework. If you look at the last two columns in particular, there's a really interesting ratio that develops there. If you look at those last two numbers and build your own ratios off those, you'll see that we are absolutely by far and away the cheapest story in the market. We are very much undervalued when you look at our contained TREO. That's really all I can say about that at this stage, for fear of being in trouble from my CFO. But please go away and do your own research on that. We are cheap, and there's a lot of room for us to move in the development space and in value. Okay, I touched on this a little bit before. As I said before, we get really strong support from the provincial government. Quebec's a great space to do business, and we've already had some early support from these guys in the previous years. But there's been, I guess, the key takeaway for me, and the most exciting thing I'd seen in the rare earth space for a long time was the announcement that came from Carney about 6 weeks ago, 2 months ago, on Canada stepping up its commitment to NATO spending. They're moving up to 5% of GDP. It's an enormous amount of money. But the interesting thing was, the takeaway from all that was that 1.5 of that 5 is being committed into critical mineral projects and associated infrastructure. And a project like ours, with an advanced metallurgical story, an enormous amount of tons, we know this thing works. We are an absolute key candidate for that sort of support. So that is something we're really going to be diving in on and trying to push as much as we possibly can. That commitment from government, I think, is going to be a real re-rate for this story, and it's something that we're focusing very hard on. Of course, it was the most exciting thing I'd heard for a long time, but then the MP deal popped up on the Fluorspar story, which probably eclipsed that. So it's been quite a remarkable 6 months or so for newsflow in the rare earth space. I couldn't imagine some of these things would be popping up, but crazy times we live in. As I said before, Quebec, a great place to do business. They are absolutely focused on opening up that northern part of Quebec. There's a couple of industry groups, government groups that we are talking to in that place, in that space. Plan Nord is one of them. Invest Quebec is the other. We have regular conversations with those guys, and they are keenly interested in supporting us with regards to gaining some money to go and sort these infrastructure pieces out. We don't want to own the road. We really want government to own the road, or even the Indigenous groups to own the road. And we'd be quite happy paying a toll to access these roads, but we certainly don't want to have that burden of trying to build an access road ourselves. It just doesn't work. And it isn't something that junior companies should be doing, in my opinion. I think these sorts of things are for the good for the betterment of northern Quebec and Quebec in a greater sense, and these things being built by government for the benefit of many, I think is a much better way to go forward. And behind that, we have really strong support from our local Indigenous groups. So the Inuit to the north, who are based in Kuujjuaq, great relationships with those guys, which is where our project is housed. And that potential access route to the south and Escarpia, they're very keen to get in and support and lobby government on our behalf to see that access road open up. As I said before, it's something that they're very keen on having as well. It's not just about trying to support us. They have their own reasons for wanting that road to go in, and we just sort of fold into that story behind it. I'll just skip through this again. Remarkable time that we live in at the moment. The geopolitical tensions that are being driven by the angst between China and the US is enormous, and that's only benefiting us. So I hope it goes on for a little bit longer. It's certainly creating a very fertile space for us to operate in at the moment. It's been great. A little bit about the deposit itself. You can see a cross section here. It is enormous, 204 million tonnes, as I said before. Great proportions of NdPr, and a good lick of DyTb that comes along with that as well. So it's an attractive basket that goes out. That would be offered up to a separator through whether it's a concentrate that we're shipping out or whether it's a mixture of carbonate. But it certainly has the right proportions. As I said before, it recovers. Really good recoveries. This metallurgy works, and that's really important. Okay. Very low strip ratios. You can see in those early years, some starter pits would just be focused essentially, potentially in that 100% ore zone only. So extremely low strip ratios, very low risk upfront mining application, very low mining costs in that space. It's essentially only ore that we're mining, and you can see that this thing is open at depth. So that pit, I think, is looking at about 70 to 80 years of mine feed, and the ability to grow that mine feed with some additional exploration is enormous. It just goes on and on and on. It's a fantastic project to have our hands on. A bit about the value chain. As I said before, we really want to stay in our lane. Our current focus is on steps 1 and 2 and potentially steps 3. We are not looking to go any further down that value chain on our own. Those steps 4, 5, 6, and 7 would be through collaboration with others, I think, in this instance. But for us, again, we need that access road in place. That's really going to allow this story to take off. But for us, very much a development story. We want to focus on those steps 1, 2, and 3. That's really where we belong. It's a lower risk story. And we actually we recover about 80% of the value of the oxides in those first 3 steps anyway. So it's a sensible place for juniors to stay, and I think that's the way that we'll be taking this project forward. Again, a little bit more on the options. You can see here, again, option 1 is just to produce a float concentrate, either sell to a third party or potentially JV downstream in hydromet, or we go straight to a hydromet flow sheet ourselves. So again, we've got some thinking to do in that space. We can wear both of those options. It really comes down to a question of economics for us, and we'll work through those options over the next few months as we close out the PEA. Again, the basket, about 25% of our basket is magnetics, and that drives about 93% of the value. So it's not the best basket out there. It's certainly not the worst basket out there. It's a good quality, robust basket. But when you combine the composition of that basket with the excellent recoveries we get at that flotation stage, that very high mass pool that I was talking about, we get 12.5 kilos per tonne that comes through. That's quite remarkable. So we produce a lot of metal for a very low input of tonnes. So we're in a good space in that area. Again, a bit more about Fluorspar. As I said before, metallurgical grade Fluorspar is really where we're going to be concentrating. It's the lower grade Fluorspar concentrate that is made anywhere between 60 and say 85%. And you can see the industries on the right-hand side that serves. We have made Fluorspar products. We have made acid grade Fluorspar products with previous met test work, as I said, but we have more work to do in that space. We really want to optimise that. We know we can do it. Mother Nature's been very kind to us in the sense that in that flotation stage, the rare earth elements float off to produce the rare earth element, the monazite concentrate. And the bulk of the Fluorspar reports to the underflow. So the underflow typically is the portion of that process which goes out to a tailings dam. We can recover that underflow process, that underflow stream. We can recondition it and refloat it and capture that Fluorspar. So There's a good segregation between RE elements and fluorspar in that very first instance, in that flotation portion of the flow sheet, and we certainly need to take advantage of that, and a little bit more work to do in that space. But US and Canada, net importers of fluorspar, there's a huge opportunity here to start servicing local markets with this particular commodity. And I mentioned niobium before. You can see in the blue, this is the rare earth deposit. To the south and to the east a bit, you can see where we've started some of the drilling, more recent drilling over the past couple of years for niobium. The niobium clusters, and they occur in clusters around this REE core. Well, eventually, if you searched hard enough, you would probably find they surround the entire rare earth deposit, and we'll look at those over time. But at the moment, there's been some interesting work done in the south there. Grades we're seeing are around 0.6% niobium, and we know the mineralogy is conducive to producing a good flow concentrate. This would be a separate and discrete flow sheet to what we have for rare earths and fluorspar. And just as a bit of information, us mining this at say a 0.6 average, we're about twice the grade of what Niobec are mining underground with in Canada. I think they may be mining at 0.4 perhaps. So this is really good high grade niobium in Canada at surface. Really nice wide intercepts. More work to do yet. There is no resource on this yet, so we can't talk about any tonnes and grade. And again, the priorities, and I guess, as I said before, very much a strong development focus going forward. We are looking to work closely with the Quebec and federal governments, and it's all about that road access. We've got to get road access. That really is going to be a re-rate for this story, not only for us, not only for you guys in the market as shareholders, but also for industry as well. Once industry can see how these molecules can leave site, it's really going to pique their interest. Those conversations will really start to become real once they can understand how those molecules are going to get off site and what the timeframes are. And we can start to dovetail into industry's plans going forward and start looking at some of those JVs and collaborations further down that value chain. We're going to close out the PEA. It's about 50% complete, and we're looking to bring that to market sometime in Q1 next year. At the completion of that, we'll have a framework essentially for a PEA, from the PEA to start our environmental baseline work. So we'll get those. We'll start kicking off those work programs. That's probably towards the middle of next year. And same with starting a pre-feasibility study. I think we're looking to start that around the middle of next year at the completion of the PEA studies. And with that comes the build out of the development team. So really want to start bringing some of those key management pieces inside the tent. It's been very much an outsourced story in the past. We're going to bring those key positions into the tent. We're not going to have a large team, but we're going to have a very focused team that owns those important study components. So we'll be looking at employing our own metallurgist. We're looking at bringing a study manager in to run the pre-feasibility study, and looking at an environmental permitting manager to come in and start looking at those sorts of things. So bringing those key positions in, as I say, small team, nimble team going forward. Continue to collaborate, not only with the government, but also the Indigenous stakeholders in the region. And as I said before, very shortly, I'm very confident that we're going to have some sort of commitment from government on an infrastructure access piece, and that's really going to allow us to really start having real and serious conversations with industry, with opportunities for downstream. Okay, Nicholas, I think back to you.
Thanks very much, Nick. That was a great run through. Really appreciate it. Very interesting story. Just a reminder to everyone that's tuned in, please take advantage of Nick here to answer your questions. So fire them in on that Q&A tab, and we'll ask Nick to address them. Nick, I just wanted to start with one on newsflow, because you and the team have obviously been very focused on completing the transaction in the last few months. But I guess for someone coming into the stock today, I mean, what can we look forward to broadly over the next weeks and months? You must have quite a bit of sort of pent up activity that you can talk about in the coming period.
Oh, look, absolutely. Look, I think what you'll be seeing, Nicholas, is a refresh on some of the more recent achievements, just to remind everyone about how well positioned we are, particularly in the metallurgical space. And you can't have a great metallurgical story unless you've got a great resource. So, just reminding everybody about some of those metrics I think is really important in the first instance. But there's some really interesting MET test work programs that Gavin Beer is looking to take on at the moment. We've got a ton of sample coming across to Perth in Western Australia. We'll be just doing some twinning of the work that's been done in Canada. And as I said before, getting those fresh eyes onto some of those metallurgical pieces. So looking at producing around 30 kilos of flotation concentrate and trying to optimise that process with some new thinking. We'll be having a closer look at Fluorspar and how that works, how that might fit into the flow sheet story. And then some of that product then going off to ANSTO as well. We'll be having another look at the mixed earth carbonate story, that sulfation bake story. We've got some really smart people at ANSTO, so just having again some fresh eyes there on those three prongs, those three commodity prongs, I guess. And then finally, there's some really interesting and innovative work that's happening in the MET space, which may eventually see a substitution of the traditional flotation and sulfation bake access that we're looking at. So we've got some really, and I can't talk about those guys at the moment. People can probably work out who they are, but there's some interesting and innovative groups out there which are looking to grab our concentrate and see what they can do with that. So certainly some interesting news flow coming from the MET space over the next 6 months. We'll be closing out the PEA, as I said before, Q1, so look out for that. And then those all important collaboration pieces with government. We're working really hard on those commitment pieces and agreements with the local Indigenous groups too. They are very keen to take that infrastructure piece story for us to government. So watch out for those.
Excellent, thanks, Nick. There's lots of questions coming in online, so we'll get straight into them. An investor says there were lots of abbreviations in the presentation, lots of commodity references. Can you summarise the main commodities that are likely outputs of the projects? And I guess for the benefit of those that may not be as familiar with a rare earths project as you.
Yeah, sure. So within a mixed rare earth carbonate it's an intermediate product. It's the secondary concentrate that you produce from the flotation concentrate. So the flotation concentrate process is really about crushing up the rocks, liberating the monazite minerals and floating those monazite minerals off. That's only half the story though, because the rare earth elements are contained within those monazite grains. So you need to break open those very robust grains, and that's what that sulfation bake process is, the second stage, and that produces. But that's the addition of a lot of acid. It's the addition of a lot of heat. It breaks open those monazite grains, releases all those rare earth elements, and that secondary concentrate that you produce is the mixed rare earth carbonate. Now that is it's a high grade concentrate. Those elements are then liberated. That carbonate can then be sold to what they call a separator, and the separator will put that back into solution and separate them out into those individual rare earth oxides. And most separators in the West are just targeting neodymium, dysprosium, terbium. There's a couple in the West that are starting to selectively pull in other elements. In China, they separate everything. So those opportunities are starting to open up in the West, but that's essentially the process. So you would change title at that mixed rare earth carbonate product phase.
Excellent. So most of the value is in those 4 key magnet rare earths that you highlighted.
Yeah, absolutely. Yeah, all 17 elements come along for the ride. In whether you're talking about a flotation concentrate or a mixed rare earth carbonate, that secondary intermediate product, all 17 elements are in there. They all come together in varying proportions, and that is always something you need to look at with these particular projects. What does that assemblage look like? What does that basket look like? And we know that about 24-25% of our basket is made up of neodymium, praseodymium, dysprosium and terbium. So 4 key elements that the market is looking for, predominantly for magnets.
Excellent. Thanks, Nick. There's a question here about the project itself, and I appreciate you're relatively new to it, but the question is there any potential environmental issues in the project area? Has anything been identified historically that you're aware of?
No, we don't think so. There was some baseline work done about 10 years ago, which some of it we can actually reuse. We're just trying to ascertain what components of that study we can reuse, and before we kick off on our refreshed environmental permitting process next year. But that process didn't indicate any issues back then, and we're certainly not seeing any issues popping up with regard to environmental permits for that particular area. I think a lot of it is consultation with the local Indigenous groups, and as I said before, we have great relationships with those guys. So as long as we're transparent and open with those guys and bring them along for the ride, which we intend to do, yeah, I don't foresee any problems with people in that space.
Fantastic. Next question here is there a CapEx estimate for the road that's needed to unlock this project?
Yeah, absolutely. Look, and very high level. We had some very high level engineering input at the desktop level around which fed into this optimization. This route selection study which we've just completed. But it's anywhere between $1 and $2 million a kilometre. Coming south, we probably need around 300 kilometres of road. So the CapEx could be anywhere from $300 to $600 million to build that particular road. But as I said, that is something that we want to keep separate from our own capital cost build-up. We really see support from government coming in and taking that over. Well, that's certainly the objective, so that's what we're pushing for. But that would be the cost of going and building that road yourself.
Excellent. Fantastic. Thanks, Nick. There's a related question here about what the wider economic benefit of that road could be, and why do you think that government funding will be there this time that I guess previous management weren't able to unlock?
Yeah, look, absolutely, and it relates back to that comment I made about GDP spending. I mean, that's a remarkable quantum for the Canadian government to commit to with regards to NATO spending, and the 1.5 of that 5. That these are unprecedented times with regards to government support. Canada has a real willingness to go it alone in the critical mineral space. But the conversations that we're having on the access road, I mean, and we talk. There's ourselves, of course. We did an access road. There's other mature mining projects in that area. Torngat are one of them that would benefit from a road to the south. There's Scandium Canada, which is, I think, in the PFS level now. They would certainly benefit from that road as well. So there's 3 plays which are certainly looking to move forward into development that would benefit from that. You have the local Indigenous groups who want those roads. At the moment, they rely on skidoo trails to get to a lot of their traditional hunting and fishing areas. And they're quite upfront. They just say, we'd rather put our skidoos in the back of a ute and drive to some of these areas. It's going to save us days, essentially. So they have their own reasons for wanting those roads to be put into place. And there are countless exploration plays which would benefit from cheaper exploration costs and having an access road adjacent to some of their properties. But we're also having some fairly obscure conversations with groups. And I did mention groups like Plan Nord, which has a mandate to open up the north. It's a Quebec government group, along with Invest Quebec. But also the Canadian military. They've made it quite clear that they want or require access to the north as well. They don't just want to be able to traverse by air. They want to be able to go by rail and road if possible as well.
Excellent. Thanks, Nick. The next question here is, would power for the mine development come from diesel?
In the first instance, very likely, yes, it would. But the Indigenous groups in the area, the Inuit and the Naskapi, they're very commercial folks, and they are both looking at their own power projects, which they'd like us to be offtakes of. So one is a wind project in the region of the mine. The other is a hydro project. So these are separate from any of our capital cost requirements. These are being progressed off their own bat, but they certainly look to us as being a major off-taker for those powers. So for those electrons. So we are certainly interested in participating in those sorts of off-take stories. And I guess as confidence grows in our project, so will confidence in those particular power projects as well as ultimate suppliers. So ultimately, we certainly do want to get away from diesel in the first instance. It's likely, I think, that we'd be kicking off with diesel.
Okay, thanks very much. Thanks everyone for those. Keep these questions coming in. There's a question here about what are the levels of uranium and thorium in the deposit, and does that present any issues?
Yeah, that's a great question. We certainly do have radionuclides. Nearly all rare earth projects come along with us with some sort of radionuclide burden. We don't really have any uranium. We certainly do have thorium. So the thorium at its background level is just at detection, basically. Uranium is not detectable. However, in the concentrate, it does get up to a level where it does become a placarded material for transport. So we are looking to go to that second stage, that mixed rare earth carbonate stage, that crack and leach phase, or sulfation bake phase, off-site somewhere. So dislocating those two processes, so producing a float con on site and then transporting it off-site to be processed elsewhere. So it would be a placarded material, but there's lots of examples of companies that are doing that. And, one of them is the company that I used to work for, Hastings. We were looking at moving concentrate products at about the same Becquerel tenor, and that's a level of radioactivity, about 300 or 400 kilometres across country to a secondary processing facility. Iluka have certainly been doing that. They've been shipping an even hotter product actually out to the coast, Geraldton, and shipping that to China. I think they've stopped doing that, but they were doing that for 4 or 5 years prior. So there's lots of, and there's any sort of mineral sands project you can think of in the southwest of Western Australia and other places in Australia too, I'm sure. They all have these same issues. That, these products need to be placarded. It's just a process you go through. There's a management plan that comes along with those licenses to transport this sort of material. So this would fall into that, within that remit. So it's eminently transportable, but it does need a management plan that comes along with it and approval.
Good answer. Thanks very much. The next question here is, will you be looking to appoint directors who are connected in Quebec and could help at a government level? Or could you comment more broadly on how you see that relationship developing and working as you progress?
Yeah, look, the first part of that answer, absolutely. We are absolutely open to, well, I think it's essential. As we progress, we certainly need that Quebec content on our board. And we are actually actively looking now, to be honest. I mean, if the right person pops up, we would certainly consider putting them on early. But no, that is absolutely the plan. We need that Quebec content. It makes a lot of sense, and in fact, it's essential, I think, going forward for a local project like this in that particular province.
And you're actually you're relocating yourself to Quebec next to lead the charge as well, I believe.
Yeah, absolutely. With my poor French, I am relocating myself to Montreal. I'll be upsetting all the Quebecer over there with my very poor, not even pub French, to be honest. I've got a lot of work to do in that space, but absolutely, yeah. I'm relocating to Montreal. Looking forward to doing that. I found from past experience, Nicholas, it's the best way to run these things, whether it be in Southeast Asia or Brazil, or being close to the action is always the best way to go forward. And we need that. We need that close contact with government. We need to really push this infrastructure piece as hard as we possibly can while we have this quite remarkable period of time. We've got this enormous geopolitical support to get things like this done. So being there and being in front of government is really important. So yeah, looking forward to that.
Yeah, absolutely. Well, it's been very much in the news, and I think Canada again this week, as part of their budget, announced their commitment through a $2 billion minerals fund. I was just going to ask you, in terms of that engagement, and you've outlined clearly how you see it playing out, but presumably there's already grant applications and various processes underway, which were already in train. You're not sort of starting from a clean slate here, are you?
Correct. Yeah. So that's not only with the Canadian government, but also with the US government as well. So the DoD, or the DOW as it's now called, there is an application in with those folks for support. I think the DOW has been swamped with applications in the last 12 months. So I think that's going to be a challenge. That coupled with the fact that things are a little bit frosty between the Canadians and the US at the moment. But that, as I said before, the support that we're seeing within Canada is just tremendous. It really is. There's a real sense of wanting to go it alone, and they're really sort of throwing everything at it at the moment. So I think we'll get what we want internally out of Canada itself going forward. So that's where we'll be, I think, focusing our efforts.
Fantastic. Just was going to perhaps, I think we've got through most of these online questions, but a couple of other ones that came in earlier, so I might just deal with those. We had an email question from a shareholder from Canada. He said his Commerce shares now converted to Mont Royal. Congratulations on the merger. How do Canadian investors receive their new share equivalents, and how do we buy or trade on the ASX if our traditional platform doesn't accommodate? Well, I think the message presumably there, and perhaps if you could just clarify that's the company is dual listed now, so you can trade on either platform.
Yeah, that's right. There is a conversion, which, there was a conversion for Mont Royal shareholders. There was a 2.3 to 1 conversion, which Commerce shareholders weren't availed of, and that was really just to square things up. But I guess if you look at what shares are trading at on the TSX-V at the moment, if you apply that 2.3 factor and then apply an exchange rate in Canadian and US, you should see what we're seeing in Australia with regards to value. Squaring that up and making it a 1-to-1 is certainly something that the company's looking at doing, just to get rid of some of the confusion that we're seeing with that disparity at the moment between the two share prices.
Excellent. There's another online question here. When producing mixed rare earth concentrate, MRZ, does that process use hydrochloric or sulfuric acid? And where would you source the reagents, if so?
Yep, it certainly does. Sulfation bake, as you can probably guess, uses sulfuric acid. It's typically on about a 1-to-1 ratio, so a ton of concentrate uses about a ton of acid. That's thoroughly mixed, and then it goes in as a paste essentially into that kiln and gets baked for several hours, coming out as a mixed earth carbonate, coming in as a con, coming out as a carbonate after that cracking process. This all leads really neatly into where should we site the hydromet, and there's a couple of really interesting options that are firming up for us within Canada, and there's certainly a lot of government interest in seeing some of these industries coalesce in certain areas. So there's industry parks, typically near ports, which absolutely suits us. We're talking to a few groups at the moment, government groups, which are looking to set up these sorts of facilities as critical mineral processing hubs and being a part of that industrial park. And they are typically located to areas where there are reagents, and both the areas that we're looking at are quite close to sulfuric acid sources. When I say close, I mean about 100 k's. You would have to truck it in, but still, it's not an arduous distance to truck a reagent like that in. Producing, we've got 50,000 tonnes of float concentrate. That's about 50,000 tonnes of acid you need to use a year, just to give you some indication. But these industrial parks that we're looking at, which are very much being supported by government, well connected with gas, power, and water as well. So, and the appropriate operating licenses for these sorts of industries. So it's an appealing concept that the government is putting forward. We're certainly looking forward to taking advantage of that. As I said, there's a few areas on offer. They'll sort of coalesce and drop out over the next few months as we close out the PEA. And in fact, in the PEA, we may not have actually made a firm decision. There might be a few options that we present in that PEA for further downstream processing.
Excellent. Thanks, Nick. Look, before we start to wrap things up, I might just take you back to that peer comparison slide, because it's a fascinating one, and there's a lot of information there. Just given this is Mont's and the project's first exposure on the ASX, so for the benefit of ASX investors, Australian investors, which of those deposits is, I suppose, closest to what you've got here in terms of scale, metallurgy, grade, etc., and how do you see, that sort of value opportunity, playing out in a big picture sense?
Yeah, absolutely. As I alluded to before, we're grossly undervalued. We are the cheapest stock on that page when you look at our contained total rare earth oxide tonnes compared to our EV. How do we compare? We're probably, as far as tonnes go, we're probably second on the list. I think Lindian is probably slightly larger. That's an enormous deposit as well. That's quite an unusual deposit, but a great deposit to be benchmarked against. With regards to mass pull, and when I say mass pull, I mean how much metal do we recover on a per tonne basis through the crusher. We're probably just behind Mountain Pass and Linus, but very close in that sense. So slightly lower grades, but probably a better mass pull with regards to recoveries. And then when you combine that with the basket deportment that we have, we've got a little bit of heavies, which I I think both Linus and Mount Pass are probably lacking a little bit. So there's swings and roundabouts, but as far as scale goes, we're probably number 2 on that page. As far as mass pull, we're probably second or third. So it's an exciting project. As I said, it just needs that access road. But had that access road, it'd be right up there with some of those peers.
Fantastic. Well, look, I think that's a good way to finish up, Nick. It's been a really interesting presentation. Thank you for your time today, and I'm sure we'd love to get you back on here regularly as this project unfolds. It'll probably be from Montreal by the sounds of it. But
Absolutely.
Maybe just a couple of final words from you to round things out for us.
Look, thanks everyone for jumping on board. This is really an exciting project. I'm very, very pleased to have been given the opportunity to steer this story going forward, and very much looking forward to creating some value for you guys with some early wins. As I said before, I think the opportunity to get that re-rate from a government commitment is real. So we're going to work really hard on that, getting the PEA out and making sure this thing is fit for purpose for industry. But enormously undervalued. Great opportunity for us to be able to take this forward and create some value and take the story forward.
Fantastic. The start of a very, very interesting story. Thanks very much, Nick, for joining us, and thank you to everyone who dialed in today as well. We really do appreciate it, and we appreciate your questions too. So a recording of this will be made available later this afternoon on the company's socials and elsewhere. So we look forward to releasing that, and we look forward to seeing Nick again over the coming months. Nick, safe travels off to Montreal. Thanks for joining us today, and all the very best with Mont Royal as you move forward. Thank you.
Thanks, Nicholas, and thanks everyone for joining.